After suffering massive losses for weeks, the S&P 500 on Friday briefly dipped into bear market territory for the first time in 2 years in a neck-breaking whipsaw session before stocks bounced back to close near break-even. Worries over surging inflation and fears the Federal Reserve, in an effort to contain it, could tip the U.S. economy into a recession have pummeled stocks this year, with disappointing outlooks this week from the country's biggest retailers, Walmart and Target, adding to concerns about the long-term health of the U.S. consumer. The Dow and S&P ended about flat but in the green, while the Nasdaq finished down just 0.3%. Still, the Dow saw its 8th straight week of declines, its longest losing streak since the Great Depression. The S&P 500 finished about 18% lower from its January 3rd record high, but during the volatile session it briefly passed the 20% threshold thought to signal a bear market. Michael Jones, chairman and CEO of iConcept, says despite Friday's rebound, he sees more pain ahead.
I suspect that we will see the bottom in the stock market probably, in the traditional summer months, particularly maybe August. Because remember, part of this pullback is not just that we're going to have a recession and the Fed is raising interest rates, but also that the market was pretty pricey. It was pretty overvalued as we moved into 2022. So we see a lot of the overvaluation and a lot of the technical support coming in as the market drops a total of maybe 30-35%. So that would suggest we're about 2/3 of the way through this bear market, but there's still a bit more suffering to come.
While not all bear markets have coincided with recessions, data from CFRA research shows that every recession since 1968 has prompted a bear market. Jones believes a recession is inevitable.
We think we will probably be entering the recession sometime, by late summer, early fall. The Fed has to raise interest rates until demand comes down enough that pricing pressures are relieved without a whole lot of help from the supply side. That means you got to have a recession. But the recession doesn't have to be very long.
Entering a bear market would mark the end of a rally that sent stocks to record levels during the global health crisis, on the back of unprecedented stimulus from a Federal Reserve, which is now reversing its policy and unlikely to come to the market's rescue.